Welcome to Taking Care of Lady Business, where we put the business back in lady business. Hosted by Jennifer Justice, founder and CEO of the Justice Department, a management strategy and law firm that works with female and woke male entrepreneurs, executives, talent, brands, and creatives to build and maximize their wealth, focusing in the areas of tech, consumer product, finance, media, entertainment, and fashion. Jennifer interviews entrepreneurial women who have done it all, who will be sharing their secrets on all things business, especially as a woman. These highly successful women will share strategies and insights, including what not to do and what it takes to win. And now, here's your host, Jennifer Justice.
Hi, everyone. Welcome to this episode of Taking Care of Lady Business. I'm Jennifer Justice. Today, we have Courtney Leimkuhler.
You nailed it.
Amazing. Founding partner at Springbank. Hi, how are you?
I am so good. How are you?
I am good. I love your dress, by the way. It's so cute.
The Zara's finest.
Oh, love it.
Courtney,
Courtney's in Montana right now. Do they have Zara in Montana?
No. Pick this little guy up on my way to the dentist in New York. So, how it does.
Love it. So I'm excited to have you on today. It's always a hot topic when we talk to women about raising money and, investors in particular and how and who they choose. But I first want to talk a little bit about how you got into it, because it's also equally as interesting, I find, why women choose this path.
Sure. Well, thanks for having me on. We were saying before you started recording how we've been following each other around for a while. So it's great.
Yeah.
Great to have this chat. And I kind of wish I was interviewing you. So maybe we can flip
next time.
Put the mic around. Yeah. But thanks. I'm really happy to be here and excited to chat. I am a very accidental venture investor, probably. I have always been in financial services. I've always been a bit of a deal junkie, so that part is not necessarily new. But started my career actually super traditional path. Back in the day, I went to Goldman as a banker. M&A was kind of my thing. But then I, for a whole bunch of reasons that are maybe a bit boring, ended up in these really wacky roles at Goldman that were not banking. And as a result, I kind of learned about electronic trading. I learned about fintech. I learned about a lot of regulatory stuff.
Can you say what those roles are? Because sometimes people will go out of school or out of finance. It's well, I can't get this job, which I think is going to be perfect, but instead I'm going to go for this. And you're ways that you can kind of, put a positive spin on it.
Yeah, totally. Well, I think it was a really good career lesson for me very early on, because I came out of college, very eager beaver, and had this job at Goldman in banking, which was the job everyone wanted at the time. Now I'm a real dinosaur because I don't think anybody wants that job anymore. But I was hired in full-time in 2001, right after the bubble burst, and Goldman just overhired investment bankers. And they were like, we don't need all these people. They didn't want to let go of them either, because they thought that would, be damaging for the brand. So they, as I understand it, basically had a sort of summit of the partners and decided as a firm that the other areas of the bank would absorb the extra investment banking analyst pool. And so they passed a resume book around of everyone who'd been hired into banking, and anyone in any other area of the bank could just choose who they wanted.
Oh my God.
I got this phone call out of nowhere, saying I had a new job. And I was so naive. I was like, oh, no thanks. No, 21-year-old, I'm sorry that you perceive this as a choice.
This is what you're doing.
Yeah. So they were honestly actually great about it. It was, I haven't been at Goldman for a long time. When I was there, the culture was actually terrific, and I worked for great partners. So it was actually a great spin, because I ended up in this business that Goldman had acquired that was really focused on electronic trading, which was very novel at the time. Again, such dinosaur talk here, but that was a really different thing. So they were building trading technology for traders to use on trading desks. They were building their own exchange that would, was a sort of rival upstart to compete with NASDAQ and the NYSE. And it was a real kind of skunk works, but it was also a real business that made money. And so instead of being on the advisory side, I actually went into a company that was a business that had customers and made money, which is pretty different than sort of traditional consulting or banking work. so I learned a ton, like right out of the gate about, how business actually works. And I learned a lot about fintech and regulation and everything that was happening in the markets at that time. So it was a huge blessing. I worked for an amazing, amazing partner who just like really invested in my career. So I was just so, so lucky. I mean, I absolutely just stepped in it. So that was like hugely lucky. And I think it also reoriented me to, as you're saying, like there are probably lots of paths to get to wherever it is you think you're trying to go. And I think just sort of letting go very early on of this idea that there is a path and there's a specific set of boxes you're trying to check off has proved to be very valuable to me, like over the rest of my career. So I'm just like endlessly grateful for that.
Yeah. There's a lot of peaks, valleys. It's not linear. There's a lot of, pivots. We've been talking a lot about that on this podcast recently. So
Yeah, cool.
yeah.
And also work is just like such a human endeavor, and you can plot and plan as best you want, and you can acquire skills. And that's obviously a very hot topic right now, right? Skill-based hiring and skill acquisition. There's lots of alternative ways of acquiring skills. And that is such an important piece of the puzzle. And also it's just very human. You're never in control, right? The CEO changes, this thing happens, there's this scandal, whatever. And suddenly everything's thrown out the window. And so I think making sure that you're, prepared to kind of make the best of whatever comes along is not really anomalous, right? I mean, I think all of us would say like that happens all the time in our careers. And so learning that was really helpful.
So then how did that get you to wanting to be an investor?
Yeah. So I guess I really leaned in. I liked the kind of strategy elements of the job that I had. I liked thinking about sort of where the market was going, which was a big part of my job, and building these like young exchange businesses and thinking about electronic trading. I ended up leaving Goldman at the time with the president of Goldman, who was John Thain, who got appointed to be the CEO of the New York Stock Exchange, which at the time was a nonprofit owned by all the big banks and run as a mutual. And it was a time when a lot of the other exchanges, you had lots of little exchanges around the country. You had like Chicago Exchange or the Pacific Exchange, and they were all demutualizing, they were going public. And so there's just like a lot of interesting activity. So I think kind of emboldened by what had happened already, I was like, woo, let's go. I'm sure something happened over there. And I actually had been admitted to business school, but I gave up my seat and was like, you know what, I'll figure it out. This is going to be really fun and interesting. And it was really
life.
Yeah, exactly. Yeah. So that was really fun. That was mostly an M&A and strategy job. We ended up demutualizing, taking the company public through a transaction. So I got to work on all that. And then also some of the belly of the beast stuff. We had to like build a budget for the first time, and we had to amazingly like figure out how to actually bill our customers, because we didn't used to bill them. It was the honor system. They would say how much trading they did, and then they would send a check. So there was some, pretty, I would say just the basic blocking and tackling of kind of putting in place the systems and processes. Obviously I didn't do this on my own, but I got to work on.
No. It's like, it's a great experience.
Yeah, it was great. Yeah. And it's just like a kind of get your hands dirty, get in there.
Right.
Really figure out how this stuff works.
Throw you in the deep side of, the pool, and without floaties, and you don't know how to swim, and say, go swim. Yeah.
Exactly.
I've done that a few times in my career. Yeah.
Yeah. I mean, when you have the luxury to take risk, which many, many, many people do not have.
Yeah.
I think that's like a really important part of the conversation. But when you have the luxury of being some degree of risk tolerant, I was young, I was, earning enough salaries for myself. I didn't have other obligations. I didn't have kids or anything like that. It felt like, there really was, there wasn't a lot of downside, to taking these kinds of risks. So I did eventually go back to business school. Then I went back to the NYC. I was there for almost 10 years in total. I ran M&A and strategy. We did a ton of deals. It was a really, really fun job. And I had a great boss who actually had been my boss at Goldman. He came over as well, because it was such a small world of electronic trading. So it turned out he was there. He became the CEO. So we worked together for years. He continues to be like a just, huge, important person in my life, and just a great mentor. So I really was lucky to spend all that time with him and on that team, and learning from him. So We sold the business in 2013. I became the chief financial officer of Marsh, which was a big pivot because I didn't know anything about insurance and I am not an accountant and had never been a CFO. So it's like a lot of strikes against me. And the headhunter.
Interesting. Like how, like if you've never been a CFO, like why would they just decide that you can be a CFO?
Yeah. So Marsh is the largest operating company of a public company called Marsh & McLennan Companies. And I had met the CEO of Marsh, who's another great guy, who's been a huge champion of mine in my career when I was at the NYSE, because one of the businesses that we built at the NYSE was a kind of tech services business where we would build technology platforms for broker dealers or for exchanges. And the CEO of Marsh, I think, really in a very forward-thinking way back in sort of 2011 or 10 or something said, insurance is so old school, but at its heart, it's a risk transfer mechanism, obviously.
Mm-hmm.
We have huge financial markets on the derivative side that are risk transfer markets. They're totally standardized, right? If you buy an options contract on an S&P future or whatever, there's a lot of standardization there. And in insurance, we don't have any of that stuff. We don't have mutualized risk. It's all bilateral risk. But a lot of these,
I literally do not understand any of those terms whatsoever.
Oh, no.
Bilateral risk, like
bilateral, like between you and me, versus if you think about if you buy something, if you buy a stock, you are going through a big clearinghouse where everyone's risk is pooled. When you buy insurance, your counterparty is like Chubb or AIG. And if they go out of business, you're out of luck. Right. So we don't share our risk in the way we do in the financial markets. Insurance is totally different. And so Peter, who's the CEO of Marsh at the time, came to the NYSE and said, hey, maybe parts of insurance should look more like the rest of the kind of stock market or the derivatives market. Could you guys build something which is sort of like a prototype insurance exchange, which is a very brilliant and forward-thinking idea? And the answer was no, because it was not well suited, our technology, to the insurance industry, but it got us talking. And so a few years later, when he was hiring a CFO, he had the headhunter reach out to me. And all to say, the headhunter said, yeah, you wouldn't have been on my list.
Yeah. Thank you.
Yeah, which is, I love candor. I really appreciated it. And he and I are still friends. And he was dead right. I mean, I really was not an obvious pick for that one. But I went a little bit the same thing, like, well, this will be fun. There's this insure tech thing is coming, and here's a big incumbent trying to wrestle with technology, and that's interesting. And I've never been a CFO before. I'll probably learn a lot. I like M&A. I had M&A as part of my job, et cetera, et cetera. So I spent 4 years there, learned a ton. It's an unbelievably well-run company with great people. But just kind of missed being close to stuff that felt like I had a bit more impact on the world around me, that I was able to pay attention to stuff outside of the industry, that I could do things which were kind of nimble and fast moving. Those are not just inherently the characteristics of more kind of corporate jobs, especially.
Yeah, seriously. Yeah.
That are more kind of, they're really important. I wouldn't change the job, but they have a lot of stewardship components to them, which for me just was a little bit less exciting, I wasn't getting my heart racing as much. So I knew I wanted to go back to do something a little bit more agile. And I took a year off. I traveled around the world with my kids and my husband and had a lot of time to reflect on like what I really wanted to do. And I just spent a lot of time thinking about what I had observed in my time in corporate, which was obviously a dearth of diversity, and was focused mainly on gender diversity, just because I had watched really, really good people in leadership roles really struggle to kind of hack the problem, and really major on the corporate side, representation, which is super important, like execs who are women on boards, hugely important. But also felt like representation was a bit of a false promise too, because the folks who were sitting in those seats were so well resourced that if you looked at the sort of average employee, they just didn't have access to a lot of the like practical and logistical supports that were needed to kind of go all in to reach those seats, and that's
Right.
everything like breast milk shipping to good childcare to paid leave if you're having a baby, all of the things that we know now and talk about a lot. And so I just got really interested in less a discussion of representation, less a discussion around like, let's teach women to be better negotiators or let's have a mentoring, because I felt like you can do all that and it is important. But my perception was like those practical and logistical supports were actually the main barrier, and like the way we worked was the problem. And when I looked around, like, what are the solutions to that? I didn't see anything happening in the public markets on the investing side, and there was no capital being allocated in that way. And then in the private markets, there was an awesome push around female founders at the time, and more funds trying to back female founders and diverse founders, which is super important. Again, we back lots of female founders. I consider myself a female founder, so that is a huge important part of it. But it felt like it left a big open space still, which is forget about who's founding this. It could be a dude, it could be a woman. I don't care who's building better childcare, who's helping families access government support, subsidized childcare, who is figuring out how to make paid leave universal. And so those were the questions that were really interesting to me. And I saw there were like little tiny companies that were just starting on the company formation side to work on that problem. And that just became something I was like super passionate about.
But for-profit companies doing this, obviously, as an investor, right?
Yeah, 100%.
And so tell me about the start of Springbank and like how it got started, and you had to go out and raise money as an LP, obvious, and get LPs,
Yep. So very baby steps it started. Personally, I had this sort of Jerry Maguire moment which I just kind of summarized for you. I wrote this whole white paper. I was in New Zealand. It was amazing. I had a lot of space to think. And I started sharing it with my friend Jen, who I've known from college. We played lacrosse together, and she was like, yeah, this makes a ton of sense to me. And I've seen it. I've worked with, thousands of small businesses that are owned by women. And I've just sort of seen firsthand that it is a lot of this practical logistical stuff. And she said, you really need to connect with Alana, who was a mutual friend of ours, who she knew much more than I did. I knew Alana a little bit through my network. We all were in business school around the same time. And she said, Alana's like this amazing systems thinker, and she has tech experience, and she has policy experience, and she was in the Obama administration, et cetera, et cetera. And like, she has very complementary kind of skill set to you in all the ways. And you guys need to talk. So Alana got roped in, and the three of us just at first, frankly, needed to convince ourselves before we could think about asking anyone else for money. And so we just pooled our capital in a tiny little vehicle, and we start writing angel checks together according to this thesis. And we did that for about a year. And then we went to folks in our network who were operators mainly. So not typical angel investors. Many of them have never done angel investing. We went to men and women, and we said, hey, let us do all the work. We'll find the deals. We'll write the memos. We'll pretend like we're a real venture fund. We'll show them to you. And if you like it, invest with us, and we'll pool our money together. So we did that for maybe another year. We did our first deal like that in May of 2020 into a great company called Wealthy.
Oh yeah, I know Wealthy. Yeah.
That was our first SPV deal, a special purpose vehicle. And then a year later in 2021, in the middle of the year, we kicked off a fundraise for a committed capital fund. And we really started with people who knew us well and had known us for a long time or had worked with us before. And we were just so lucky that there were folks in that network who really showed up for us. Our very first check was a big check from my neighbor.
Nice neighbor.
Yeah, she's an incredible woman. She's been in asset management her whole career. She is an immigrant who is completely self-made and just an awesome champion for women. It was like, I like what you're doing. And, when you get some of those in the door, and then we were really lucky, a really well-known New York-based venture fund called Union Square Ventures was sort of our second big commit. And that helps answer the question, like, are these people totally dopey? Have someone else who's pretty smart saying, no, I don't think they're totally dopey. So that was huge for us. And then, kind of picked up steam from there. So it's never easy. ever raising money. And my view is like, it shouldn't be.
Yeah, that's
I
true.
like to do my due diligence before I give someone my money. I like to make it pretty hard for them. So I think that's actually fair, especially when you're three women who we've been fortunate to have like a lot of great career experiences, but we've never done this before. And so I think people were right to watch us for a while, see how our returns look, see how our companies are doing. I mean, obviously this is the type of work where I won't know for a decade whether I'm any good at it, but I think there's comfort in at least being able to watch you. We've done probably 30 investments by now. So, we can talk through our investment process and our thesis and how we evaluate founders and that kind of stuff. And of course, it's not perfect and we're learning as we go, but it takes time for people to kind of watch and trust and
Yeah.
consider.
Yeah, I mean, but obviously your ladies are doing it, which is amazing. So let's talk about more like practicality, like what is the thesis? What is the genre that you're doing solely? And then what kind of like checks and stuff do you write?
Yep. So we have a $35 million fund. We invest mostly at the seed stage. We also do some pre-seed and some A. So we're talking about like between the first and the third round of outside capital that a company ever really raises. We typically write checks that are between about $500,000 all the way up to maybe $1.5 million in the outside case. And the thesis is to invest in what we think is the missing infrastructure that supports women and working families. Sometimes I just call it the infrastructure to close the gender gap.
Yeah.
Right. The wage gap, the health gap, the domestic work gap, the
wealth gap.
Gaps around. Yeah, the wealth gap. And so we thematically organize it into career, care, and consumer. So it's on the career side, it could be everything from kind of changing the way world works today. So we have an investment in some HR tech companies that help you better understand and analyze your workforce, for example. It could be tooling for 1099 workers, deskless workers, people who are in the kind of flexible workspace, because we know women are often forced into that space because of caregiving responsibilities. So how do we make those jobs better?
Yep.
On care side, it's of course childcare, elder care, certain areas of women's health. And then in the consumer side, it's not really consumer products. And we talked about this a little bit in the beginning. It's a little bit more thinking about the health and the wealth and the sort of sustainability of families. So we look at a lot of things in the fintech and insurtech space around improving the financial health of families. We will look at some kind of domestic productivity stuff. So that's sort of how we break it down.
And so when you guys are doing this and looking, I mean, I'm sure you get like a massive inbound, obviously, of decks and etc. What's the one thing that's like the first thing that makes you most interested?
Oh, such a good question. We're so thesis driven. I think we have a pretty academic lens. So we are the most intrigued by the problem itself. And we spend so much time in our thesis. I think for a lot of areas, we are developing a pretty prepared mind. So we know what we're looking for, or we've seen a bunch and we know what we're not looking for. And so we often are most attracted right away to like the idea, the problem, how is someone uniquely trying to hack it? Second, of course, is the founder, how is the founder market fit? Is this the right person to do this thing? I think something that has been really interesting to me is when we first started, I would say most of the founders that we met anyway, were a lot like me in that they were sort of mid-career. They had come across this problem. They were like, wow, this is a problem, right? Oftentimes they experienced it themselves firsthand, and then they wanted to fix it. And that like founder experience is super valuable. It can have the downside though of meaning that this person is coming out of an area of industry where they are lacking some of the networks that are really important to build a startup, like access to engineering talent or access to fundraising, or just sort of like Silicon Valley know-how, how's my deck supposed to look, or what is a safe? So those can be challenges. So one of the things that we did really early on was we started a founder group called the FamTech Collaborative with an amazing woman named Amy Henderson, whose that brainchild it really was, who had started organizing founders like this for sort of in-person gatherings in San Francisco. and another woman named Lynn, who is the founder of Urban Sitter, which is kind of a care app. Yeah. So Lynn Perkins, who's also amazing. And the three of us, plus of course my partners, Jen and Alana, but maybe a little bit me on the front end, just said, wow, like this thing, which is quite small but powerful, like it could become this national network, and it could really support founders who want to build in this emerging space of famtech. And so really as just sort of a bit of a labor of love from the three of us, we kind of leaned in to start to build it into this national virtual only network. It had a Slack channel, it had events, and it exploded through COVID. And it was a really great resource for founders, as I said, who saw this problem, started building, but really felt like I'm the only person in Ohio who's even thinking about this problem right now, and suddenly they were connected to a national group of hundreds of other founders who are working on the same thing. So that's been really cool to see.
That still exists, that you guys.
Yeah. It's really scaled. We're very fortunate to have a partnership with Melinda Gates's Pivotal Ventures.
Oh yeah.
And they have been terrific about supporting a lot of the ecosystem building work that we do apart from the fund. And they have been really amazing enenablers of turning this FamTech collaborative into a real thing. So now it's a 501c6, which means it can...
I don't even know that. I've never even heard that term before.
Oh yeah. So it's an industry association, basically. So it's structured as a nonprofit industry association that has the ability to have members, to accept philanthropic money, but also can engage in advocacy efforts. And so we know a lot of the mood music around building solutions for families and women has, political, legislative, regulatory overtones sometimes.
Yeah.
And so being able to
a little bit,
give a voice to this industry of folks who are building has been really important. So we have an amazing director now named Anna Stephanie who runs that. There are hundreds of founders in it. There's great programming. There are some corporate were coming. So that's been
there's
really
so much that you just said over these last few minutes that I just want to touch on. First of all, and that's the thesis. Like, I know for founders, so many female founders are looking for female venture partners, right? And then they go to them and they're like, but that's not in my thesis, right? And I even hate it because I'm helping them, and I'll go and I'm like, okay, but you guys do consumer and food, but not in like what we want to. And it's like, but you try to make it fit, you know what I mean? It's like, but it's this, and it's so disappointing. It seems like in the beginning, but like the great thing is you get an answer, right?
Yes.
And so, and so I just really want to put it out there for female founders when they're listening. It's like, just because somebody says no does not mean that your idea is bad or whatever but it's just not in the thesis, right? But it's, think about it. How many times are you a founder in your whole life, right? If it's one, it's very rare. And so to start hearing no's in particular from women, you start getting like, well, women won't invest in me, and I just really want to clear the air on that one point, because I know I'm always disappointed too, but it's like, because, you want this whole cap table full of all these fabulous women, but it's not all the same thing. And you realize that like those partners that do say yes, they're so deep in that area that they can help you so much. Right. And so if they're not in your area, you might be taking money and taking equity away from yourself. And it's just money. It's not also the resources, and to think about it that way. And then the other thing that I love that you're doing this for the founders, because, there's always been this kind of weird hype about like, well, they got to be young and hungry, but they've never done anything. They've never worked, and now we're all watching the Netflix series and the Hulu series on all of these people who built these big companies, but were awful leaders. Mm-hmm. And it wasn't just because they were men or women, but it's also because they didn't have experience.
Yeah.
And they also had an ego, so they didn't hire the people who were experienced to help them or partner with them, right? And it's not to say that the companies weren't big and successful, but a lot of people got hurt in a lot of these companies, where employees who were taking hardly any money and they had equity, et cetera. So I love that you are focusing on people who actually have a problem and then giving them resources. They might not have been the strongest, quote unquote, founder, what we would think about as the Adam Newmans or the, whatever, the Mark Zuckerbergs or whatever before, like, but giving them these resources around
Yeah.
to take a bet on them,
Right. I mean, I think that's sort of the point, is that what we want to do is expand the founder pool. And we actually also want the Stanford grads and hoodies who are suddenly looking at things like childcare, who are thinking, you know what, I could really fix this. I would really
Yeah.
love to put some of our smartest, hungriest young grads, yes, they may not have experience, but they have also a lot to offer, and get them on some of our biggest problems instead of building a new pizza delivery app or a new game. That's obviously my bias, but I guess I think the point is we want kind of like everyone building in these categories. We have like
Exactly.
massive problems to solve. I mean, I'm talking about one of them, but we have some really big societal challenges that I'd love to see, like more smart people with experience, without experience, engineers.
Everyone working together. Yeah. And
Like,
it's not just like
let's,
shiny new toy.
let's try to elevate the problem set, make it seem big and juicy and interesting. Like a big part of what FamTech is trying to do is also drive data and awareness around how big these problems are and how there is such great opportunities for tech in some of
Yeah.
these. And then kind of bring together the right mix of founders, right, who have that lived experience, who have that engineering experience, who have that fundraising network, and kind of make that magic happen. That would be the dream. I'm not saying we're there now, but to me,
Yeah.
when we think about this, like that's really a North Star, and I think that's probably what catalyzed things like climate tech and, other emerging categories. You have sometimes really wonky people or scientists, right, at the beginning who are pointing out the problems but don't necessarily have the resources to marshal the investment community or whatever it is. And so we
Exactly.
start standing up all the different characteristics of a successful company or solution.
Right.
Get
So to
them going.
balance it all out, right? Instead of
Yeah.
just like, let's get the shiny new toy and it's like sexy or whatever. It's like
Yeah.
actually build companies. I mean, I think we all just saw the news that Uber is finally profitable after, I don't know how many years, 13, 14 years.
Yeah. Maybe more.
Some people made ridiculous amounts of money. Some people did not, it's like we have, very entertainment, the Hulu series about it, or, you know what I mean? It's just, all those things, but, seeing it from, this kind of go full circle where it's like people have these problems and maybe they, and you're giving them a chance and surrounding them with the right kind of information so they can succeed in getting these very important problems solved. I love that. That's awesome. Just, another like, part of your job, building a whole new network, right?
Well, I really can't take credit now. I mean, this thing is really standing on its own 2 feet with an incredible director who has taken it like absolutely 10x'd it. So, I'm
That's
glad
in a
that we.
very short period of time though.
Oh yeah, no, totally. It's been awesome. She's fabulous. She's a former founder herself who had an
Yeah.
exit. So, she knows 0 to 1. She's done it. And
Yeah.
now, we're really lucky that Anna has decided to kind of give back in this way. She could do a lot of things. She could build and sell another company, but she's decided to kind of build this nonprofit instead, which is very cool.
Yeah. Amazing. Okay, so I know I unfortunately have to let you go very soon. And in doing all this, thank you so much for sharing everything and all of the amazing work you're doing to help make families in particular and their, and understand that it's not just so easy and to take it into this millennium, basically. But in doing all of them, you have a very long, amazing career and you've pivoted from place to place. And I'm sure a lot of people felt the need to give you advice. So along the way, so I would love to hear what's the worst advice you've ever received?
I was thinking about this because you gave me a heads up, which I appreciate. I tend to be terrible at these questions. I think I just like erase these things from my mind. But what did sort of come back to me a few times, like I remember a former boss type telling me not to go to business school. I remember, people telling me maybe not to take the, year off or something, or not to quit my corporate job. And I think I don't know that anything was uniquely bad advice, but I think what bottoms out for me is oftentimes you have people giving you what sounds like advice, but it's actually coming from a place of like deep self-interest.
Yeah.
And that's obviously going to be bad advice, most likely. And so I actually think we're all innately pretty self-interested. So I think it's kind of on you as the advice recipient to try to figure out like, what are no matter how great this person is, right? What are probably their motivations, or
Yeah.
what are their ghosts that they're carrying around, right? That are informing why they're telling me this.
Yeah. What's in it for them?
Yeah, a little bit that, or just, what have they been burned by, right? That they're trying to help me
True.
avoid.
Yeah. That's another way to look at it. Yeah.
That's like not something that I'm afraid of, or, not something that would happen again, or, and so I think for me, like, there's all kinds of advice. Some of it's bad, some of it's good, but probably nothing is like objectively bad or good. It's sort of trying to understand, like, what is the set of experiences that is like leading to this piece of advice, and do I think that those sets of experiences are actually relevant to me in this circumstance? And so I think I know it sounds like a bit of a non-answer, but that's something that I've just really thought about a lot over time.
I totally agree. In fact, the way that you put it then, like when I was growing up, my mom didn't graduate from high school. My grandmother, they did nothing. We were very like, simple country people, and like no one went to school, and I was supposed to get married and have kids when I was like 16, like my mom did. And I was like, I'm going to college. They're like, no. We don't go to college. We don't go to college. Like my college counselor, my high school counselor, they came in, had a meeting, like, look, she's very smart. Like she should go to like Stanford. And we don't go to college. And it was like, okay, but like, why? You might not, but I'm going. I mean, obviously I didn't listen, but like,
Right.
but it's all fear-based, all fear-based, and it wasn't because my mom didn't love me or whatever, but it's like fear-based. Like, that's just not what we do. That's for other people,
Interesting.
Yeah.
How did you, like, where is the place in you or in your community or network that like you developed the conviction to go against the advice of your mom?
I mean, nature versus nurture. I don't know. People ask me that all the time. I don't know. I just know that it wasn't an option staying where I was. Like I was miserable,
Yeah.
Yeah. So, no, it's not a non-answer. It's very real. And I think it'll resonate with many people when you look at it that way, for sure. Yeah. All right. So where can people find Springbank? Where can they learn about the companies that you've invested in?
Come talk to us. Send us great founders. We love meeting them. So our website, springbank.vc, all one word. And I'm on LinkedIn. That's kind of it. I'm not on X or Twitter or whatever it's called anymore.
Threads, whatever. Yeah.
Yeah.
X. I forgot about X.
Find us. Yeah.
And what about some of your companies? Can you just like shout out some of your companies so people can look into them?
Oh yeah, totally. I'll do as many as I can remember. So Wealthy, Dandy, Wealthy, WELLTHY.
Yeah.
DANDI, which is a really cool D&I company. Little Otter, Divergent, DAI Vergent, Season Health, Origin, which is a women's physical therapy company, Parento, paid parental leave insurance. What else? One we're about to announce, so I can't say anything now. Yeah, those are the ones that are top of mind that are in the fund right now.
I love it. Amazing. Thank you so much for coming on and taking the time. And for everyone listening, thank you for listening to this episode of Taking Care of Lady Business. Until next time, I'm Jennifer Justice.
49 faces looked to him in triumph. Over the last 12 months, they had each taken turns and promoted his business for a week at a time, driving over $987,342 in revenue. What if you had a network of 50 centers of influence who promoted your business every week for a year? Grab your copy of the #1 Amazon best-selling book, The Ultimate Guide to Growing Your Business with a Podcast, at 33% off the Amazon price by going to ultimatepodcastbook.com. Again, that website for 33% off the Amazon price is ultimatepodcastbook.com.